new true crime podcast you need to hear to believe.
I need police right now. I've just started broken into my house.
2 men dead at the hands of a teenager and almost every moment recorded.
Please, don't move.
Put the knife down.
I was just trying to help her.
What happened at Alba Beach was as horrific as it was baffling.
There's so much contradiction. We should know more than we know.
I'm Adam Hegarty. I'll take you inside one of the country's most confusing investigations in this exclusive 60 Minutes podcast.
Ambulance, police, inquest, a domino effect of failures. It's killing us.
I'm not a police officer anymore. I can speak more freely.
Alba Beach, Death at the Door, wherever you get your podcasts.
The Australian Financial Review.
Hello, I'm James Thomson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague, my fellow king of the conference circuit, it's Anthony Macdonald. How are you, Anthony?
A lot of coffees from the coffee cart this week, James.
Fantastic. Well, this week, Anthony's reporting live from the Sydney Opera House for the biggest markets conference of the year, the Sohn Hearts Minds event. We'll also round out bank profit season with the 2 biggest movers of them all and take a great question on investors in the housing market. But first, Anthony, let's start with a big energy story this week. A big battery development in New South Wales, just about, 100 k's up the road from where you are at the Opera House, is looking a bit shaky after a meltdown in a huge and vital piece of equipment. It's given us another reminder of how hard our energy transition will be. Now, tell us a bit about what's actually happened here.
This is a big battery. It's so big, it's got its own name, the Waratah Super Battery. It's being built on an old power station site up on the Central Coast in New South Wales. Like you said, about 100 k's north. And it's big, like one of the biggest in the world. Oof. Now, the company that's building it is called Acacia Energy. It's a privately owned company owned by BlackRock and a fund manager that BlackRock has. That's a big investment giant. Started building it in 2023. Completed it last year, and it's sort of been in partial operational testing for the past few months. Now, once it's up and running, James, it's going to have an 850 megawatt capacity. That's a lot, right? That's like nearly 1 million homes for an hour each of power, right? Really, really big. Yep. Anyway, this big battery is made up of 3 big transformers. They're the things that shift the energy around it. One of the big ones basically blew out, right? And it's been taken offline. There was a second one that they had online. They took that offline to make sure the problem doesn't get bigger and bigger. And the whole thing's sitting there now looking a little bit busted and like it's going to be delayed.
Right.
So it's been front page news all week, James. Angela Macdonald-Smith, friend of the podcast, she's been all over this story.
Yes.
And like you said, it's a big reminder that transitioning the grid, shifting from coal power to things like renewables with these batteries as backup to help sort of firm the whole system, it's just hard, right? Like, and there's going to be problems along the way. Things are going to trip up, and building these big projects is really difficult.
Yeah, no, absolutely.
Of course, this all plays out as the Liberal Party's agreed to dump its net zero target by 2050. What do you make of that decision?
I think it's a bit of a mess, actually, Anthony. I mean, you can understand where the coalition's going here. The Nationals dumped the net zero target. The Libs have essentially followed to keep the coalition together. It looks like that to me. I'm no political expert, obviously, but I just wonder about how this decision plays with some of the key Liberal constituencies. I mean, we've seen the Liberals lose all those seats to the Teals in the inner city. I don't think dumping net zero wins them back. I don't think dumping net zero is going to win over the sort of disaffected younger voters who are increasingly important to electoral power. I was at an event this week where Arthur Sinodinos, a sort of long-time Liberal moderate minister in the Abbott and Morrison governments and a former ambassador to the US, he made the point, you dump net zero, what's the alternative? And I think we've seen, even in the last couple of days, we've seen the coalition really struggle to come up with what the alternative message is here. And I think that's going to be an even bigger challenge as we go along. Basically, they're saying, we don't like net zero, but yeah, we're not entirely sure what else there is too. But I guess the one thing you could say, Anthony, is a bit like the battery failure, this coalition move does show that the transition's going to be lumpy and bumpy and pretty messy.
It really does, James, but I agree with you. Politically, this is going to be really, really hard to win seats in cities. And if there's one thing the Liberal Party needs to do to get back in government, it's to win back some of those seats. Right now, this strategy, surely it would poll terribly. If there's polls around it with the mainstream Australia, sure, it might help the national side of things. It might help the rusted on further right side of the party. But for everyday Australians, it's not good. I mean, their only hope, I think, is that with the passing of time in the next few years, maybe Australia has a more realistic conversation around net zero, what it actually means, how realistic it is we're actually going to get there.
Yeah.
Maybe that will go in their favour.
Well, I think it's okay that, Anthony, to be realistic about, are we going to get to net zero or whatever? But I just think back to those energy summits.
Yeah.
We had it a couple of weeks ago. Frank Calabria, the CEO of Origin, saying, I need policy certainty to make big investments. Like, there's no way this is policy certainty. Whatever it is, it's the complete opposite of that, isn't it?
Great point, James. And James, I'm on the conference circuit. You're on the conference circuit. You headline the 2-day ASIC summit in Melbourne with more appearances than even ASIC chairman Joe Longo. Six panels. Well done. Now, what did you learn for our dear Chook podcast listeners?
I learned that there's plenty to be worried about out there in the big wide world.
Yeah.
The first speaker at the ASIC summit was actually ASIO chief Mike Burgess. It's not something we come across a lot in the business world, but geez, he was a good speaker.
Yeah.
And he really gave this message that there's a hell of a lot of risks out there. Foreign agents are doing very naughty things. They're doing very naughty things to business. They're stealing blueprints and trying to get intelligence to tilt negotiations, and all sorts of commercial stuff's happening. But the risk is foreseeable and it's actually pretty manageable. He made the point that 99.99999% of the stuff that comes across their desk, think things like cyber attacks, they basically have a root cause where everybody knew there was a problem. They just didn't get around to fixing it.
Wow.
And his message was, sorry guys, that's not good enough. You can't just get the PowerPoint presentation of here are all our risks. You've got to actually do something about them. So thought that was an interesting message. The other thing that came through time and time again is this intergenerational inequality piece. It's infecting lots of parts of politics. Every regulator is worrying about it. I don't think there's any great solution, but I did think it was really interesting that everybody is talking about it all of a sudden. I know this has been a big topic for a while, but almost every person across every panel had some reference to this. It's just seeping into everything that we're about. Really, really interesting, I reckon.
Yeah, it sounds like they gave another few risks for our big bear, Thomson, to think about. Was there anything positive that came out of it?
Well, one positive thing I'd throw at you is that the regulators are really open to playing a role in sort of trying to improve productivity.
Okay.
They have heard the message that there's too much regulation, there's too much red tape, and they are trying to throw it back a little bit on business and the community and saying, okay, we hear you. Now, what red tape should we actually get rid of? And they do say that when they ask that question, people sort of go, we sort of like the regulation, but it's just too much of it. So, but I think, take the one positive, regulators are ready to try and deal with this. Yeah. And I think that's a really good thing.
Yeah, nice.
All right, Anthony, you've scored the Chook podcast ticket to the Sohn Hearts Minds conference this year, which is back in its spiritual home of Sydney. For the uninitiated, the conference is the biggest gathering of Australian fund managers, brokers, wealth investors, and other markets personalities, colourful and otherwise, all talking investment ideas and market themes to raise money for medical research. Anthony, I was in Adelaide last year, you did Sydney the year before that, and I did Tassie the year before that. This has really become an annual fixture on the calendar. So tell us, what's the buzz like down at the Opera House this year?
Oh, it's a beautiful day in Sydney, James, of course. Sitting here looking at the Harbour Bridge, the sun's shining over the harbour. There's plenty of people around, plenty of people in suits walking in and out of the main Joan Sutherland Theatre here at the Opera House. It's a big theatre, James. I couldn't believe it. When I first walked in there, there's 710 people. Wow. It's got to be twice as big as the last time this conference was at the Opera House. They were in a much smaller theatre back then. Now, you might hear a bit of music playing in the background. Every time a stock tipper comes on and off the stage, they play a bit of music. So
Walk on.
just be a little bit ready for that. Lots of suits around, to be honest. It's a bit of a scene, really. Slightly older crowd, as you'd expect. The crowd that are into buying and selling equities. I mean, we're pretty fortunate to live in this financial markets bubble, all in the same place at the same time. Most people here, they're probably not short of a crust, to be honest. A lot of people coming not straight from, but having been at the VIP party last night, James, there was a drinks function. Lots of bankers and fund managers and brokers in the room. Of course, everyone patting each other on the back. Lots of networking. Lots of people looking over your shoulder to see who else is in the room. Maybe that's just because they were talking to me. Treasurer Jim Chalmers opened the conference. To his credit, he started with a joke that went down really well, that he's here to represent the parent company of Australia, and he basically just pitched the room Australia. So, while not quite a stock tip, he definitely got into the spirit of him. So, you got to give it to him.
Good on him. Well, I'm glad that the VIC, the very important chook, was at the VIP party. That's good. This is a big charity event, Anthony, and it's done some really great work for medical research. But what the punters love, of course, and the punters on AFR.com particularly love today, are the stock tips. So give us a few. What are people talking about?
The first stock tip, James, was an absolute belter.
Right.
From a guy called Eric Wong, CIO and founder of a firm called Steel Point Investments in New York, and he went wide. he picked something that no one would have ever heard of, a stock that has no investment bank covering it, a Hong Kong small cap with about a US $1.4 billion market capitalization. And believe it or not, he reckons it's going to be a winner from the US-China trade war, and it's actually a Chinese exporter. Right, which sounds like craziness, but it's mostly Japanese owned, listed in Hong Kong, like I said, and it builds and exports modular factories. Right, designs them, builds them, and exports them to the US. Now, why is this interesting? Well, we all know that tariffs are reshaping trade lines. Trump's trying to beef up AI, and AI being American industrialization, not just artificial intelligence. And he's whacking tariffs on, pharmaceutical companies who import their drugs and stuff, right? So these companies have responded straight away by saying, yeah, hold on, we're building American manufacturing capability. Don't hit us with the tariffs. So there's a bit of a scramble going on to build these factories, and this company called Morimatsu International Holdings, according to this stock picker, has its order book up 6 times this year with these factories. Like I said, it designs, builds and ships to the US. Now, the best thing about this stock, James, was that it was something no one had heard of, right? It's a complete bolter. And, as soon as he starts telling the story, these pictures are pretty similar, right? They sort of, they keep you on the hook for a couple of minutes. They tell you all the good stuff and then they give you the name. As soon as he says the name, you just see everyone pull their phone out, check out the PE multiple on this thing, the free cash flow yield, and get excited. So I wouldn't be surprised. That one particularly sticks in the head. I wouldn't be surprised if Comsec did a bit of volume in that stock. We also had US steelmaker Steel Dynamics, which is about a $20 billion company in the US, pitched by a UK fund manager, Peter Rutter. He basically said there's 3 reasons why it could increase its profit 1.5 times in the next 12 to 18 months. And even if you don't think you're going to get a massive market multiple for this thing, a 1.5 times in profit should correlate to a 1.5 times increase in the share price.
Yes.
Now, this guy, Peter Rutter, he didn't seem to be a big blue sky techie believer necessarily. James, you probably would like him. He seemed very grounded in the real world. But he's just talking about a steel business that's got a new plant coming online. He reckons the steel market got flooded with cheap Chinese steel ahead of the tariffs. That inventory's wearing out. Steel price should get better, and this thing should start making more profit. So that was a good one. One more, James, from Chow Ma, Munro Partners, an Australian fund manager, but she invests globally. She tipped the company that owns UFC.
Oh.
The mixed martial arts.
Yes.
And also owns WWE. All right. So it's called the TKO Group. It's US listed, about a $40 billion market cap. And she said the thing that makes this special is that it's in this perfect intersection between sports rights and entertainment.
Yep.
Right.
Yep.
So we know that live sport, is still incredibly valuable, right? For streaming services, traditional TV, they love their live sport. Problem with live sport is there's seasons.
Yeah, okay.
Like you've got like the NFL season in the US, or the NBA season, or here we have the AFL season and the cricket season. UFC doesn't have seasons. It can run all year round. They can schedule it whenever there's demand, wherever they want, sell the rights. The rights have apparently doubled every time they've come up for auction in the past a few years. So she thinks it's an incredibly unique and valuable product at a time when there's this sort of like intersection between sports and entertainment globally that's really driving dollars. And the final bit of a pitch was you have to be a billionaire to be invested in sport normally.
Right.
Now, at the Sohn Hearts Minds conferences, there's a few billionaires in the room. So, I mean, we all knew what she was talking about. But something like this democratizes it, right? This is like investing in sport through the share market. So, I don't know. They were interesting stock tips. But it's taking place at a fascinating time in markets, James. Like, you wrote another couple of columns this week about the AI bubble. And it's something that does hang over this conference. It is something they're talking about on the sidelines. What's your latest thinking on the bubble?
Oh, look, Anthony, I think there's a couple of things to say. One is that we're starting to see the AI bubble pumped up by debt, which is an interesting new phase. Up until now, the big tech companies have been able to pay for their AI investments out of cash flow, which is a good thing. But now they're taking on debt to do it, which is, just adds another level of complexity to the whole AI bubble. Once you owe someone money for something, you're on the hook.
Another risk, Mr. Thomson.
Exactly, another risk. So I think that's worth watching. Power, everybody's talking about power. And data centers, obviously, there's a data center announcement every second day. Everyone's talking about power. Morgan Stanley did some research this week. You just take the US. All the data centers have been announced. That's all great. There's 44 gigawatts of power that's short to help make these data centers into a reality. And if you take a price of about $60 billion US a gigawatt, that suggests $2.5 trillion US is needed. And that's not including the $2 trillion US you actually need to build the data centers.
Wow.
So there's a hell of a lot of money involved. Just one last stat that I love this week. Another one from Morgan Stanley. Mm-hmm. They've calculated all the investment in AI and they've said, okay, let's say we need to get a 10% return on all that investment. The math says that the investment needs to generate $650 billion US a year forever.
Wow.
To pay for all that, to generate that 10% return. Now, I can't get my head around that. $650 billion US is a big number in any year, but in perpetuity. But think about it like this. That equates to $54 a month from every iPhone user in the world forever.
Forever.
Wow. Now, it won't just be consumers. It won't just be iPhone users paying for the AI bubble. It'll be governments and, of course, mainly businesses. But I reckon it's an interesting way of thinking about it as an investor. Would I pay $54 a month forever for AI services? And my immediate reaction when I read this was, no way. And then I've sort of been thinking about it. Maybe over time you would if the AI services were good enough. So those couple of things are really important. Debt, power, and returns, that's where the conversation is really focused on. And I'm sure you'll hear a bit about that as you go through the day at Sohn. You've got there's some great investors, some great global investors coming up. Is there any other big trends at Sohn, apart from the stock tips, that are really jumping out at you so far?
Well, we got a sneak peek of an IPO candidate, something that really piques my interest, James, called Rocked, the ad tech business. I mean, that's something where if you make a transaction online and, you get the pop-up afterwards, like, would you like to buy something else or whatever?
Yes.
That's Rocked's business, right? Look down in the corner and who's actually behind that ad. Often you'll find it's Rocked, R-O-K-T. Now, this is interesting for me because the last time I was at this conference, the IPO contender that was pitching, and it was a fantastic pitch, of course, was Guzman & Gomez.
Yay.
Right? And then sure enough, it listed the next year.
Yeah.
Now, Rocked is unlisted here. It's Australian born and bred, but really it's a US business. It wants to list in the next 12 months. This is the company that's trying to work out whether you could list in Australia and the US at the same time. If that doesn't happen, it probably just goes straight to the US. So anyway, it's interesting to hear about that. So Michael Hinsey, one of Australia's leading markets exports, he had a few themes, James. You would have really liked it, talking about populism, changing to the world order, growth, how all that stitches together. Really, though, I think it's just all about the magic of the stock picking and the storytelling, right? Like it's only really dawned on me, and I know I'm a little bit slow to this, James. The stock picking and investing, it's just telling stories, right? It's just like, it's the ability to come up with a bit of a magical story, sell this dream state in the future, get the people investing to try and own those profits down the track. So, we're getting all sorts of stories here, and they're the stories you'd expect. The first time I invested in stock and what I learnt, the stock I found in China that no one else knows about, like all that magical sort of stuff. I mean, that's really, for me, what's memorable.
I love it, Anthony. Enjoy the rest of the day down there. It's great to have some insights live on the spot.
James, let's get to our second topic. Bank results season wrapped up, and I reckon we saved the most interesting two results for last. Commonwealth Bank of Australia and ANZ. The ANZ got the week started with a pretty ugly set of numbers, financial and non-financial metrics going backwards everywhere, only for the shares to keep posting record highs. CBA's was a quarterly statement, yet its shares copped an absolute pasting. The ASX's number one company belted nearly 10% in 2 days to its lowest levels since the Liberation Day kerfuffle. James, you were on Bank Watch all week. Let's start at the ANZ. On a scale of bad to really, really bad, how bad was this result? Was it anything like a Reece, a CSL, a Woolworths, or a James Hardie like we saw in August?
Anthony, my answer is who cares? No one cares about ANZ's numbers, mate. You're in the past.
Sorry.
The numbers aren't important. We got to look to Nuno Matos's bright lights of the future, the light on the hill that he's placed. I mean, I'm being a little bit facetious here. The numbers weren't great. Costs are skyrocketing, but we expected that because they've just cut 3,500 jobs, and there's a cost to that. When you make lots of people redundant, you've got to pay lots of redundancies. Mm-hmm. So costs are up. Revenue growth is pretty moderate. But analysts and investors, they don't care. They are looking to the turnaround story that Matos is selling, and they are lapping it up. The analyst call, the verbal equivalent of high fives were dished out to Nuno throughout the call. Analysts love that he's talking very directly. He's setting very clear targets. There's nothing wishy-washy about the way he speaks. And it's really resonating with the market. So what we have seen is investors back the idea that Nuno can turn around this business and turn it around relatively quickly. Now, I am a little bit more skeptical because this is a multi-year project. This is a 5-year project to turn this business around. Yeah. And I've been doing this for a little while, Anthony. 5 years is like a century in banking. Some banks can have a couple of CEOs in that period. We've seen it happen.
Yeah.
Some banks can start their big cost-cutting project only to find, we'll have to abandon that target 18 months down the track. And what Nuno is promising is not just cost-cutting, but also revenue growth. That is a very hard double act to pull off. But the skeptics, they've been washed away. They've been washed away in the stampede as punters jump into ANZ stock. So that's the story, Anthony. Don't worry about the numbers. It's all about the message, and Matos's message is resonating with investors.
All right, that's a good summary of ANZ. What about CBA? The numbers there looked okay, yet the share price reaction was huge. What's the story behind the numbers there? There must be something else going on.
Well, I'm tempted to say the same thing, Anthony. Don't worry about the numbers. It's all the story. Because you're right, the numbers were broadly fine, basically in line with analyst expectations. There was a little bit of pressure on margins, but a tiny amount, and a little bit of pressure on costs, again, but a tiny amount. But it's the direction of travel that matters here. The banks have been in what's called an upgrade cycle, so analysts have generally been lifting their earnings projections over the course of this year. This has forced, this quarterly result has seen some analysts, only some, drop their earnings forecasts. Now, usually by 1.5%, which again is not a lot, but investors have just decided we've gone from an upgrade cycle, we're going into a downgrade cycle. CBA has run the hardest. It's the most expensive bank in the history of the world, as we've been told several times. We don't want to be in this thing. We've ridden this rocket ship as far as it's going to go. Now it's time to do something else. And what we're seeing, Anthony, is a lot of people get out of CBA and get into ANZ. It's a staggering move. I mean, as you said, CBA is going to end the week down 10%. 10% is a big move in any stock. For the biggest stock on the market, it is a ginormous move. And it's not really because of any strategic misstep or anything that the bank and Matt Common have done wrong. It is just the the tide of sentiment has moved against them. And, you know, some of those forces that have pushed CBA shares up really far, passive investment flows, super investment flows, we're seeing that when they turn, it can go against you. So it's a remarkable story, Anthony. We haven't seen this much, have we? A 10% move in such a big stock.
Yeah, it's big. And it shows like we've got this big liquid company, CBA, this big funding source, you know, owned by Australian and offshore investors. And when it moves, it can move pretty quickly. Like we saw it back at its results in August as well, James. You might remember there was the big sell-off on that day. Like it is bouncing around.
Yeah. And Anthony, we've had now all the big four results plus Macquarie in the space of 10 days. What's your big takeaway?
Oh, the easy thing to say here would be revenue, expenses and profit. Expenses are growing well in excess of revenue, which means even with cost cut programs, profits simply cannot grow. They just can't. I mean, James, I think we've been talking about that for the past 3 bank results seasons, really.
Totally.
4. Like for me, that's not new at all. I'd say what's new this time is just the way you've got 3 of the big 4 banks have got new CEOs come in and they're really outlining their strategies and they're all sort of doing the same thing, you know, telling us they're going to concentrate on customers and business banking and that, but they're all kind of doing it differently. They all think they're going to win. They're all telling their investors they're going to win and their shares are trading like they're all going to win. So ever since we've had Westpac, NAB's and ANZ's results, all 3 of those banks' shares have been trading at record highs and continue to hit new record highs, right? Like there's so much belief in their stories. Now, all of their stories can't come true. No. They can't all come true at the same time. There's not enough number 1 positions in business banking to share around. The blue ribbons, there's only one blue ribbon, right? For me, that's what's memorable. It is, you got 3 new CEOs laying down the guardrails, some of them producing their sort of like first or second result. Nuno not having to take responsibility for numbers yet, but clearly it looked like they were tanking the FY25 to make the turnaround story better. But I tell you what, the rubber's really going to hit the road, James. The next 1 year, 2 year, to see which of these turnaround plans or new strategies actually takes off, because you got to be doubtful they all take off at the same time.
You're totally right. It is fascinating to see when the outlook for bank growth has rarely been so constrained. Bank share prices, or 3 of the big 4 bank share prices, have never been higher. There is lack of logic there that is striking, and I think you're right. Next year will be a fascinating year for the banks as the rubber hits the road, and we can't wait to see where it all goes, to be honest.
Just quickly, James, so we've got ANZ's Nuno Matos, Westpac's Anthony Miller, NAB's Andrew Irvine. They're all getting a pretty good reception at the moment. Like I said, the shares have been at record highs. Which of these 3 do you reckon could get pegged back to reality first?
Oh, that's a really tough question, Anthony. I think Anthony Miller at Westpac is doing this big tech turnaround project called Project Unite. It's going to take 4 or 5 years. They're going to, basically rebuild the entire tech platform on which Westpac operates. History says that will run into cost overruns and time overruns that will end up being pretty difficult to manage. So do we get one of those in the next year? Possibly. Does something go wrong at ANZ that, again, pushes the time frame of its turnaround out? Possibly. So I'd be looking to those 2 banks. But look, when any stock is at an all-time high, as we've seen with CBA this week, the potential for disappointment is very real.
Yeah, I agree. There's a lot of excitement factored in. I reckon it's hard to pick just yet which of the 3 is going to come off the ball yet. I haven't been doing this for as long as you and sort of don't know the stories as well. But it's just funny, though, how we've still got CBA, the premium bank, out in front. It's the one that's getting crunched in the terms of share prices, while the other 3 just go up.
Yeah, indeed. All right, Anthony, we'll be back straight after the break. We've got a stack of AGMs to look at next week and some really important data from the RBA. Back in a sec.
A new true crime podcast you need to hear to believe.
I need police right now. I'm just stabbed and broken in my house.
2 men dead at the hands of a teenager, and almost every moment recorded.
Please, don't move.
Put the knife down.
I was just trying to help her.
What happened at Alba Beach was as horrific as it was baffling.
There's so much contradiction. We should know more than we know.
I'm Adam Hegarty. I'll take you inside one of the country's most confusing investigations in this exclusive 60 Minutes podcast.
Ambulance, police, inquest, a domino effect of failures. It's killing us.
I'm not a police officer anymore. I can speak more freely.
Alva Beach, death at the door, wherever you get your podcasts.
If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Okay, Anthony, we are in the heavy lifting part of AGM season. Next week, we've got Medibank, Insignia Financial, which owns MLC, WiseTech Global, that'll be fun, and Reece, the plumbing supplies business, which was the subject of a big downgrade and a big share price fall. Usually the Reece AGM is over in about 12 minutes. I might be exaggerating a touch there, but not much. I reckon it might be a bit more interesting this week. What do you think?
Yeah, it could be interesting, but I reckon out of those four, James, it's hard to go past WiseTech, isn't it?
Yes.
Yeah, just the year that they've had, the troubles around Richard White, the leadership changes, the board changes, the big US acquisition, lots going on and lots to sum up in a shareholder meeting.
Absolutely. On Tuesday, we get the RBA minutes. This will be really interesting. Obviously, we had that decision to stay on hold. I guess, Anthony, the thing we should watch for in the minutes was that sort of a unanimous decision or a decision that was painful to get to. Some people wanted to cut, some people wanted to hold. That's what we're looking for, isn't it?
Yeah, Michelle Bullock said in the press conference afterwards that it was unanimous, but it's like everyone's trying to work out, is the next move, do they think up or down?
Yeah. And one thing to mention, the US government shutdown is over, and so we should start to get in the next week US government data starting to be published, although the White House has said we may never see the jobs data for October and the CPI data from October. Make of that what you will. Were they good, bad or ugly? We'll never know. But it will be good to, Jerome Powell, the chair of the Fed, has been talking about the fog of the government shutdown and this lack of economic data. So it's always nice when the fog lifts, isn't it, Anthony?
The fog is clearing, James.
Excellent. All right. Well, we love questions here on the Chanticleer podcast. This week, our question is from Sarah Jane from the Bellarine Peninsula in Victoria. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us. And, of course, the widget on articles by Chanticleer on afr.com also gives you the chance to ask questions. But here's our voice question from Sarah Jane this week.
I've really been enjoying the last few weeks of listening to you both talk about the AI bubble. So on that theme, this week, the ABS released data showing that in the last 3 months, 40 billion, that's 40 with a B, was lent to Australians to buy investment properties. This is a 19% annual growth in loans doled out by our banks to buy mostly existing property. When you sit back and look at the data, do we all have a blind spot that Australian property can never, politically or economically, be a bubble?
It's a great question, Sarah Jane. And it's one, Anthony, that's been really a focus of this week. Both Matt Common and Nuno were asked, and in the previous week, Andrew Irvine at NAB and Miller at Westpac were also asked about this really strong growth in investor loans. And actually at the ASIC conference, the prudential regulator, John Lonsdale, he was asked about it too by me, and he said he is watching it. They are watching it because the growth is very, very strong at the moment. Anthony, I reckon there's two issues here. We've absolutely lit a fire under the housing market in the last month or so with the rate cuts we've already had, with the first home buyers changes. You're starting to see this come through in a major way. So does that start to translate into what's called the wealth effect, where people feel like their house price is going up, they start spending more, that adds a little bit more inflation to the market? So I reckon that's one of the major questions for me. Does rising house prices start to worry the RBA and Michelle Bullock? And then the second question that Sarah Jane's getting at is, do we have a bubble here? I'm not sure we've got a bubble, but it's certainly, you'd have to say, Anthony, there's a bit of froth back, isn't there?
There is, but it's hard to see demand dropping too much,
Yeah.
and it's hard to see supply picking up too much. 10 years ago, we used to talk about a bubble in the Australian housing market, and we used to get all these offshore investors come to Australia sniffing around, shorting the banks, thinking that property was way overpriced, because it is incredibly expensive from a global perspective in terms of a multiple of the average household's wages, in terms of how much debt we have to borrow to buy a house. So it's indisputably expensive. But I think we've got ourselves into this situation where it's hard to see if it is a bubble, how the bubble bursts, just because of those demand-supply dynamics, unfortunately. They're both still supportive of house prices going up. As we saw, last week, Westpac talking about 9% house price increases across Australia next year.
Yeah, I took a bit of heart from Matt Common at CBA, who said, with interest rates remaining on hold, that should take a little bit of the froth out. If interest rates stay on hold for an extended period, which looks sort of likely at the moment, then we might see a bit of that froth come out. The sharp increases in house prices start to dissipate. So that'd be a good thing, wouldn't it?
Absolutely.
Yeah. All right, Anthony, thanks for joining us and taking some time out of your busy schedule down there at the Opera House to report live for the Chook podcast. You don't feel like belting out a bit of your favourite aria or something for us, do you, mate?
Another sunny afternoon. Can you tell I went to Oasis last week and I'm sitting here looking at the sun coming up over Sydney Harbour?
How good was the Oasis shows? I went in Melbourne too. It was something else, wasn't it?
Mate, I've just got those songs bouncing around my head. Had it all week, so it's been great.
Sign of a good concert. All right, Anthony, get back into the Sohn event, and thanks for joining us. We'll talk to you next week about a whole lot more. A busy week coming up.
Absolutely. Catch you then.
Thanks for listening. We'll talk to you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson, and Anthony Macdonald. It was produced by Mandy Coulin and Alex Gow. Our theme is by Alex Gow. Head of Premium Content is Fiona Buffini.
The Australian Financial Review.
A new true crime podcast you need to hear to believe.
I need police right now. I'm just stabbed and broken into my house.
2 men dead at the hands of a teenager, and almost every moment recorded.
Please, don't move.
Put the knife down.
I was just trying to help her.
What happened at Alba Beach was as horrific as it was baffling.
There's so much contradiction. We should know more than we know.
I'm Adam Hegarty. I'll take you inside one of the country's most confusing investigations in this exclusive 60 Minutes podcast.
Ambulance, police, inquest, a domino effect of failures. It's killing us.
I'm not a police officer anymore. I can speak more freely.
Alba Beach, Death at the Door, wherever you get your podcasts.